Hi, folks. Welcome back to our Forex Trading. This is Forex Intermediate episode 7. And in today's lessons, we will cover the following objective. At the end of this lesson, you'll be able to understand the various types of candlesticks pattern. You'll also be able to differentiate between morningstar and evening star candlesticks patterns. You'll be able to learn why evening star and morning star candlesticks patterns are high probability. And besides, you'll be able to understand how to trade the morning star and the evening star candlesticks pattern in terms of entry and exit. So this far we have covered one or single candlesticks pattern, whereby we looked at the doji. We have also covered the two candlesticks pattern, where we looked at the bullish engulfing. And today we are covering the three candlesticks pattern, whereby we shall dwell specifically with the morning star and evening star. But you need to note that there are different types of three candlesticks patterns. We have the three white soldier and three black cross. We have the morning star and the evening star. We have three inside up and three inside down. We have the rising three and the falling three. All these are types of three candlesticks patterns, but in this lesson we are going to major in morning star and evening star, since they have higher probabilities than the rest of the candlesticks, three candlesticks patterns mentioned here. So when we talk about morning star, this is a bullish pattern, and it forms at the end of the downtrends or at the bottom of the downtrend. It indicates change of direction, that is from downtrend to an uptrend. So when the morning star pattern forms, it will signify change of downtrend and now to an uptrend. Therefore, they are reversal candlesticks patterns. Let's look at a scenario, typical scenario. So where I have circled, you can see three candlesticks. We have the first one, which is the bearish candlestick. Then we have the second one, which is a bullish candlestick. And we have the third one, which is a bullish candlestick. So the three candles, this one, this, and this, and this, the first one, the second one, and the third one, they form three candlesticks pattern. They are three candles that form a candlesticks pattern called morningstar. Okay, so we are looking at these three candlesticks. You can see here the bearish, the bullish, and the bullish. Okay, so when you're trading these morningstar, we first of all said that they form at the bottom of a downtrend. So this is our downtrend, and therefore they form at the bottom of the downtrend. We have said also they signify change in direction from downtrend to uptrend. So you can see the moment this candlestick pattern formed, the morning star, we had an downtrend, and therefore the trend reverses now to an uptrend. Okay. So therefore, how you do trade them, at the end of that candlestick, the bullish one that you can see, that should be your buy entry, and your stop loss should be slightly below the wick of the middle candle or the second candlestick. That is where you have your stop loss, and then your TP or take profit. The first take profit, you need to take your partials at this point. That is the first high when you look on the left, and the third and the second take profit, which can be the final take profit, it's at this point where I've written TP2. And this will give you a risk to reward ratio of 1:3. So there are key things that you need to note about the morningstar. For the morningstar to be a valid or a high probability candlesticks pattern, it must exhibit the below characteristics. So the first candlestick must be bearish and form at the bottom of a downtrend. So this is our first candlestick. So it is bearish and it must form at the bottom of a downtrend. So we had a downtrend and this is the bottom of a downtrend. So our first candle must, and you need to note that it must be a bearish candle, okay? The second candlestick will be some form of indecision candlestick, especially a doji or a spinning top candlestick, okay? And it can be either bullish or bearish. So this is our second candle. So you can see it can be either a doji or a spinning top or a spinning top. So a spinning top. So you can see this one. So it indicates some kind of indecision. Okay, it can either be bullish or bearish. So in our case, this is bullish. The third candlestick must be bullish and must close above the midpoint of the first candle and must be bigger than the second candle. Okay, so our third candle must be bullish to indicate that buyers are now in control. So this is our third candle. It must be bullish. It must close at past midway of the first candle. This is the first candle, and it must be big than the second candle. So this is our second candle, and you can see how that candle is big. So it meets all the criteria. This pattern meets all the criteria of a high probability Morningstar pattern. The opposite of evening star, or the brother of evening star, or the opposite of morning star, or the brother of the morning star, is called evening star. And in an evening star, this is a bearish pattern. It forms at the end of uptrends or at the top of an uptrend. It indicates change of direction, that is from uptrend to downtrend, and therefore they are reversal candlesticks patterns. So in a scenario, a typical scenario where I have circled is where we have our evening star pattern. So you can see the first candle, it's a bull candle. The second candle, it's a bull candle. And the third candle, it's a bearish candle, okay? So again, this was an uptrend, and you can see the pattern forms. It formed at the top of an uptrend. And the moment it formed at the top of an uptrend, it signifies change in direction from now an uptrend to a downtrend. So the market sold. It changed the direction from uptrend to be an uptrend. So for the evening star to be valid or high probability candlestick pattern, it must exhibit below characteristics. Number one, the first candle must be bullish and form at the top of an uptrend. So this is our first candle. It must be bullish and form at the top of an uptrend. So this was an uptrend. So it formed at the top of an uptrend. Okay. The second candle will be some form of indecision candle, especially a doji or a spinning top candlestick. Okay, or a spinning top candlestick. It can either be bullish or bearish. So this is our second pattern here. So it shows some form of indecision. It can be a doji, spinning top, any type of candlestick showing indecision, especially dojis. It can also hammers can fit here. So you can see this is our second candle, and it qualifies. So it can either be bullish or bearish. It qualifies the characteristics that is mentioned here. The third candlestick must be bearish and must close above the midpoint of the first candle. So the third candle must be bearish. This must be bearish. If it's bullish, the pattern is not valid. It's not high probability. So this must be, the third candlestick must be bearish and must form or close past halfway the first candle. So you can see this is the first candle. A half is somewhere here where the body closes, but this candle closed below the body. So it closed below more than a half of the first candle. Then it must be bigger than the second candle. So the third candlesticks must be bigger than the second candle, and as you can see, it's bigger than the second candle because the body is very much elongated. Okay, so when you're trading this type of candlestick pattern, the evening star, and you have identified that it's a high probability evening star because it meets all the three characteristics that we have just mentioned. So at the end, at the close of that candle, that's where your sell entry must be. And then you put your stop loss slightly above the wick of the second candlestick. Okay. And then you'll have your TP, a minimum of risk to reward ratio of 1:3. So you can take your partials at the first low point. You can see this is our first low. So you can take your partials at TP1. Then you can have your final TP at the second low, that is at TP2. And all that said, this accumulates to a minimum risk to reward ratio of 1:3. So when you're trading these patterns in terms of exits, when you are using these patterns in terms of exit, let's say you are in an uptrend, you add a position in an uptrend direction. So the moment you saw this pattern, evening star pattern forming, we said that it indicates a change in direction. So you'll be able to know that there's a likely change in direction coming. And therefore, once it forms, once it finishes forming, or at the close of the third candlesticks in this pattern, you now take your profit and exit from the long positions that you had in an uptrend. When you are trading them, when you are using them to exit trades in a downtrend, for instance, using the Morningstar. So let's say this is the downtrend, right? And let's say you had a position, you had identified some patterns above here, and you took your sell position. And the moment you see now this type of candlestick forming, the morning star, here at the bottom of the trend, you know that the market is likely to reverse and go in the opposite direction. That is an uptrend. Therefore, you exit your trade or you take profits at the moment when you see the morning star forming. So these candlesticks patterns, the morning star and the evening star, they are very crucial, especially for traders, and they use them to signify change in direction. You know, when the market is either buying or selling, it does not continue selling all through, or it does not continue buying all through. It reaches a point that the market has to reverse. And therefore, you need to be equipped, or you need to be able to know various types of reversal candlesticks patterns that you can use to be able to know or to grasp that the market is reversing. And the evening star, the morning star, the doji, that is especially the gravestone and the dragonfly doji, they are very powerful candlesticks patterns that you can use to be able to show reversal, as well as the bullish engulfing and the bearish engulfing, especially when they form at the bottom of a trend or at the top of a trend. You can be able to identify or be able to know when the market is about to reverse. So it depends on the type of candlestick. Let's say, for instance, when you talk about the evening star, you'll know that the market, the uptrend is about to end and we are about to go to enter a downtrend. When we are using the morning star, you'll be able to understand that the downtrend is about to end and we are now beginning the uptrend. When we are using the bullish engulfing, it will signify to you that the downtrend is about to end and now the market is about to reverse and go in the uptrend. When you are using bearish engulfing, you know that the uptrend is about to end and the market is about to reverse in direction and go in a downtrend. When you are using gravestone doji, you know that the uptrend is about to end and it signifies to you that the market is likely to go in the downtrend. When we are using the dragonfly doji, it will be able to signify to you that the downtrend, it's coming to an end, and now the market, it's about to change direction to an uptrend. Okay, so that's how you use this candlesticks pattern. You can combine several of them if they form at a particular point, and you'll be able to have high probability entries. So this brings us to the end of the candlesticks chart patterns. And this does not mean that those are the only candlesticks. We have 1,000 of candlesticks. But as I began saying, I said that I will be teaching on high probability candlesticks patterns. These are candlesticks patterns that when you master them, they increase your odds of being successful or being profitable in the market in the long run. So that being said, thank you so much. And I encourage you to share this video with friends and also to subscribe, like, and comment. Thank you so much and see you in the next video.